Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN AM for Friday, February 5th, 2021. And here are our top stories: the mergers and acquisitions trend in higher ed, and declining enrollment, and what colleges and universities can do. Well, joining me now to discuss this and a lot more is Rick Seltzer. He's an editor for Inside Higher Ed. Rick, great to see you. Thanks so much for joining us on the program this morning.
Thank you for having me, as always.
It's a pleasure. And higher ed, so important, but also a lot of change going on. I know one of the things you recently wrote about, Rick, was the increase in the number of mergers and acquisitions that is happening both for private and not-for-profit colleges and universities. What's the latest there?
Yeah, that's right. It's been a kind of long developing trend that we're seeing more interest in M&A. And just recently, we had a deal between two for-profit institutions that many individuals maybe won't have heard of, but it's actually a very interesting deal for a number of different reasons. The basics are that the 15,000 student host university, which is located in Connecticut, largely online, but it does have an in-person campus, is acquiring American Sentinel University, an entirely online university based in Colorado, with between 2,500 and 3,000 students. Now, American Sentinel is really interesting, not only because it's entirely online, but more because of the programs it operates entirely online: healthcare and nursing programs. It actually has a simulation product that allows nurses to do some clinical work online. And so that's something that if you're a college or university, not only does that expand the number of students in different areas that you can teach to be nurses, it also gives you a whole potential new market. Can you sell that to hospitals or other health providers who are looking to offer continuing education? Nurses need to do that work, and there's certainly interest in doing it efficiently and doing it well. There's also some discussion about maybe using that product in other programs that have some sort of an in-person component or a continuing education component. So there's a lot of different potential benefits to the buy side in this. Now, the deal doesn't have financial terms released, but it's still interesting in part because of the timing. For-profits were widely expected and are widely expected to be under more scrutiny under the Biden administration. And we just saw a high level of interest in conversion from for-profit to not-for-profit status, or in M&A among for-profits in the waning days of the Trump administration. So the fact that they put this out a couple of weeks after the Biden inauguration shows, I think, that the interest in these kind of deals is not going away, that it is going to continue. Another thing I heard from bankers and others in this space is that there's a relative lack of cash in the for-profit M&A market. If you're doing a deal and you're the seller, you're probably not getting cash in return. I don't know if that's the case in this deal. They maybe did find a way to do a cash deal. But that relative lack of froth or lack of cash floating around maybe shows some realistic evaluation of these deals as needing to be long-term payoffs, building the overall value of the stock that you get back. And that's important, not just for the for-profit space, I think. A little bit of a leap here, but the nonprofit space has struggled in some cases to do M&A deals because there's no seller who gets paid off. And so if the focus is becoming more those long-term fundamentals, those long-term prospects, I do wonder if this shows a little more, a little different thinking that's more applicable to the higher education space. That maybe would lead to more consolidation going forward.
And Rick, we're going to talk about demographic decline in the second segment. I know you did some writing on that as well. But is this part of this conversation that we've been having since we've been talking for a couple of years now, of just some, survival of the fittest and some larger institutions maybe gobbling up pieces or all of a smaller institution to maybe save that portion of the institution or further enhance the financial viability? Because at the end of the day, Rick, these are businesses, whether they're for-profit or not-for-profit. You've got to be able to offer a product to your clientele, your students, and attract them to your university.
You're absolutely right, both from the student perspective, from the marketing perspective, but also from the regulatory perspective. Scale can matter a lot. If you are going to face more regulatory overhang, if you're going to have to be filing more disclosures or doing more reports, it helps to have bigger scale to subsidize that. By the same other side of the coin, attracting students with the programs they need sometimes requires you to have more programs. And that's why this deal is really important or really interesting for Post. They had, I believe they had an RN to VSN nursing program, but that was it. And these healthcare nursing programs, other programs with quick ROI for both the student and the university are really, really hot right now. So the idea that you can bolt this in, add some scale to the smaller institution's nursing program and give yourself a program that's already running is really attractive.
And also, I think as I've learned from talking with you, the research element is big. So if you have a research arm of your university, that can be very profitable for federal and state grants from donations from large donors, right? So this is another area that we would expect, I would think, more activity in order to bring people in. I know you were talking about the acquisition of researchers from one university to another. Could there also be entire research divisions that come over from one that get acquired?
Yeah, I don't track the movement there as closely as I do just plain M&A, but I have anecdotally heard both from university leaders and from professors that research teams get recruited, that is an area of high interest, oftentimes by the more prestigious, wealthier institutions. But you're absolutely right. It's really important. Research dollars are a source of revenue not directly tied to students. And in recent years, the public research dollars available have been either tapering or holding relatively steady, depending what measure of inflation and who you talk to. So it's kind of a more mouths to feed for the pie that hasn't really grown at the same rate.
Rick, last question here. When we last spoke with you, we talked about some of the universities not bringing children, not bringing students. Sorry, they are children, someone's children, but they're not bringing students back on campus because of the COVID spike outbreak. What's that look like? Because is that still continuing? Is there still pressure from an enrollment perspective? What I'm trying to get at is, are these colleges, universities still under a lot of financial straits, and maybe this is another reason for more acquisitions?
Yeah, the short answer is yes. There's strain. It's all over the board what the plans are. Some are bringing back different classes, so maybe they brought the sophomores back in the fall, and now they're bringing the freshmen really for the first time to campus, or vice versa. But generally speaking, they've still cut capacity. They still have a large number of students online, of faculty teaching online. That's expensive. The dorms are not as full. So, I think there's been a fair amount of easy money available in financing in the bond market to a certain extent to allow them to kind of surf the next few years. We have low interest rates, but it is a can that you cannot kick down the road eventually. I think that the added expenses and lower revenues of this year, barring more federal action, could be a considerable driver of consolidation. Absolutely.
Yeah. Well, Rick, very interesting topic, and I think it dovetails nicely into our next segment. We come back, we'll talk about the demographic decline and what that means for colleges and university agility and their ability to adapt. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Hi folks, Joe Namath here, and if you're on Medicare, this is important. You're now entitled to eliminate co-pays and get dental care, dentures, eyeglasses, prescription coverage, in-home aids, unlimited transportation, and home-delivered meals, all at no additional cost. Plus, your zip code may have coverage with the Give Back benefit that adds money back to your Social Security check every month. Look, with the uncertainty of the virus and vaccines, you need to get everything you're entitled to. Here's the bottom line. Call to get significant benefits at no additional cost and see if your zip code has coverage with the Give Back benefit. Millions of people have trusted the Medicare Coverage Helpline. You can too. Call now. It's free.
Call 1-800-924-3920. That's 1-800-924-3920.
Welcome back. We're talking to Rick Seltzer of Inside Higher Ed. Rick, thanks so much for staying with us this morning.
Hey, I always enjoy it. Thanks for keeping me around.
Absolutely. We certainly enjoy talking to you. Really important topic. So let's talk about this demographic shift. We talked about throughout segment one and going into the break. And we've seen a decline in enrollments for a lot of reasons that I'm sure you will talk about. But how can universities and colleges be more agile when it comes with dealing with this?
Yeah, it's been a topic of conversation for certainly a number of years now. There's an author, he's an economist at Carleton College, who a few years ago put out a book, Demographics and the Demand for Higher Education, that broke down by region what different types of institution, and even by state locality, what demand they can expect going forward at a very high level. And the answer was, it's not good. You are seeing a big birth dearth following the Great Recession. So student cohorts for higher education went up for something like 20, 25 years straight, including the time through about 2015. Then you generally see a tapering off, some increases leveling off. But what's happening is the students are growing more diverse and they're located in different parts of the country. So those parts of the country that have the highest density of colleges and universities, generally speaking, Northeast, Midwest, are expected to see the biggest declines. And that means you see a shift towards the South and the West. At the same time, you're seeing some changes in likely wealth levels. It's always hard to project forward wealth levels. These go into the 2030s. So you never know for sure because you can have disruptions as we're experiencing now with the virus. But likely less wealthy overall, likely more diverse, less white, which basically means that in some cases, you have to be more culturally competent. You have to be able to do different things to recruit and support and retain these students. And that's where these strategies come into play. Graw's out with a new book. He's updated the projections, but basically the updates show that the overall trends are the same, and colleges maybe get another year or two, maybe another 5 years before this thing really hits them. But it's still coming after 2025.
Rick, before we get into maybe some of the ideas about being more agile, is the prestige of a college degree or a master's degree, has that declined? I know you talked about some of the cultural shifts that are necessary to recruit and attract, but given what your understanding is from reading the book and just the overall marketplace, has maybe the prestige of going to a very a nice university, gone down. Maybe it hasn't translated into value in terms of salary. Where do college students stand with that, or prospective college students stand with that?
Yeah, if anything, the most prestigious institutions are likely to see more demand. It is kind of down the food chain that you see more a more complex situation taking shape. So you have a more diverse student body, likely a lot more first generation students. And so I think there's this push and pull between the idea that you need well-resourced institutions to support them. Those institutions generally are more likely to get a first generation student if it's closer to home. Not always, people will fly the plane, if they're going to Harvard. If Harvard lets them in, they'll fly the plane across the country to get there. But it's a little different if you're kind of the next step down in the food chain. And so there's this tension between low prices, which are also needed oftentimes for first generation students. If you haven't been to college, or if you don't have a lot of financial capital in your family's bank account, it's hard to pay high prices. And it's hard to get past that sticker price, even though many students do not pay sticker price. So then you're looking at two-year colleges, or your regional publics, or some of your privates that are a little less well known. And those are all very good institutions in many cases, but the demand profiles just aren't shaping up to be as strong for them as they are the top of the market.
So what are college presidents, administrations, board of trustees doing in terms of being agile? Is it to what you're describing earlier about how you market yourself, being agile in terms of the cultural identity of your prospective students, or is it more than that? Is it financial agility?
Yeah, there are a few different buckets, and what's interesting about the buckets is they overlap, which makes them a little hard to talk about. But you're right; it's a kind of all of the above, or two or three of these six. So recruitment and retention are big. So is growth, and in some cases, so is retrenchment. So layoffs, merging away, going out of business, maybe in some cases, and doing it in a responsible manner where you are supporting the students that enrolled with you before you sunset the operation or merge it away. So what's interesting here is, let's use the example of the acquisition we talked about before. Post acquires a smaller university with nursing programs. So that's changing their academic programs. It's also growing that university. So doing one without the other may or may not work for them, because if they were going to change academic programs without growing, they would have to go through layoffs. They would have to cut programs in all likelihood. And for a for-profit, that's relatively easy. But some of these nonprofit institutions, they have a shared governance structure. The faculty very firmly believes, and in many cases is entitled to, under university bylaws, a say in how those things are playing out. So it's not as easy as just saying we're going to cut the physics department. You have to go through a process of talking about that and figuring out what the way forward is, and that looks very different at different institutions. That's why you'll see oftentimes a focus on just growth through recruitment. It's easier to try to get however many students you need to make next year's class, which closes the budget. The challenge there is, if you recruit them, get them as freshmen, and they leave, you haven't really plugged the budget gap long term. You haven't really set yourself up to be sustainable. And that's where this idea of retention, of listening to who your students are, how much they can pay, what kind of support they need, how the high schools they come from are different than the high schools that you're used to. I'll use the example of a small private colleges for this. In many cases, small private religious colleges have traditionally drawn from private high schools. So I'm thinking of Roman Catholic institutions in particular. So, if I'm a small Catholic college, I often received a large number of students from private Catholic high schools. And that has worked very well for them for a long time. But if the population of Catholic high school students is declining, I'm going to have to recruit more from public schools. And that is just a very different student who's had very different life experiences.
Well, it sounds like everything else, and this is before COVID,
Correct.
A lot of challenges, and it's something that both what I'm hearing, and it's very similar, by the way, to the pension debate, which is everyone's got a part to play. There's going to be some level of compromise here from the administration, from professors, teachers, from the students in terms of expectations about today and going forward. So I guess we're going to have to see how this all plays out. Rick, always a pleasure chatting with you. Really interesting stories. Great to get an inside look at higher ed from an editor at Inside Higher Ed. All the best to you, Rick. Great talking with you, and we'll talk to you again very soon.
I'll look forward to it. Same to you. Thanks.
And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to? Then drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, check out today's edition of our newsletter, The Morning Pulse. Don't forget, we're back again tomorrow for BRN Weekly. We'll have a very special guest, and we'll take a look at some of our best segments for the week. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Waiting here for you to take and drink of. But if you're tired of the same old stuff.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.